The recent Iran ballistic missiles launched on Israel in response to Israel's actions against Hezbollah in Lebanon significantly rose oil prices. Brent futures increased to settle at $73.56 a barrel, while U.S. West Texas Intermediate crude reached $69.83. The conflict heightened concerns about potential disruptions to oil supply, particularly if Israel targets Iranian oil facilities. In the Red Sea, the Houthis and the Iran-backed group claimed responsibility for attacks on vessels, further raising fears of instability in the region. Analysts warn that an escalation could lead to attacks on Middle Eastern oil producers, notably Saudi Arabia. Prior to the over 200 missile attacks, the oil market was already facing downward pressure due to expectation of increased supply and moderate global demand. OPEC is set to meet soon, with no major policy changes anticipated, while Libyan oil output may also recover following political developments. U.S. oil storage data is expected to show a continued withdrawal of crude, indicating tight supply conditions. The recent escalation in the Middle East, highlighted by Iran's missile strikes on Israel, could have significant ramifications for global oil markets, and in turn, the immediate rise in oil prices reflect heightened geopolitical tensions. If conflict escalates, particularly regarding Iran's oil facilities, global supply could face severe disruptions. Such a scenario could lead to increased oil prices worldwide. Countries like the US and various European nations may experience higher transportation and production costs, which would likely result in increased prices for goods and services. In contrast, oil exporting nations could see short-term economic benefits from rising prices. But prolonged instability might lead to market volatility and uncertainty. For Nigeria, one of Africa's largest oil producers, this situation presents both challenges and opportunities. Higher global oil prices could boost Nigeria's oil revenue, providing a much-needed influx of foreign exchange. This revenue could help support the national budget and potentially ease economic challenges, such as funding infrastructure projects or social programs. However, Nigeria's oil sector is faced with issues like theft, vandalism, and operational inefficiency. If tensions in the Middle East lead to sustained price increases, it might attract more global investments into oil production. Yet, Nigeria must ensure it can meet any increased demand and avoid disruptions in its own production. On the downside, rising global oil prices could lead to increased domestic fuel costs, contributing to inflation. Given Nigerians' reliance on oil for revenue, any instability could impact government budgets and social services, potentially leading to unrest or dissatisfaction among citizens. The situation might also influence Nigeria's foreign relations, particularly with nations involved in the conflict as an OPEC member. Nigeria's stance and actions in response to this development could shape its diplomatic and economic relationship in the region. While the current geopolitical tensions could create a short-term boost for Nigeria's oil revenue, they also pose risks that could exacerbate domestic economic challenges. Balancing these dynamics will be crucial for Nigeria as it navigates the unfolding situation. Do not forget to follow us on all our social media platforms on Fact News Hausa and Fact News Africa.